much, Diane, and thank you again to Josh and Daisy for that fascinating conversation. I actually hadn't drawn the parallel before between the cruise industry and real estate, but we're dealing with a lot of the same issues, including net carbon, so it was really great to hear how he was approaching that. My name is Caitlin McCarthy. I'm the founder and CEO of Ionic Development Company, a Boston-based real estate development and consulting firm. And being in real estate in the past 10 years has been fascinating, to say the least. Just a few snapshots about what's going on in our industry. The price of luxury residential in Miami has grown year over year up to 30% over the past 10 years. Back up in the Northeast, a 1 million square foot iconic office building is hitting the auction block this month. Meanwhile, data center construction is unprecedented to keep up with AI. However, that might all be upended with DeepSeek. Needless to say, it's an industry in transformation, but as we all know, within transformation comes opportunity, which is why I'm so excited to introduce today's panel on the new era of real estate. We'll have John Fish, CEO of Suffolk, Adolfo Enrique, Vice Chairman of the Related Group, and Ben Brown, Managing Partner of Brookfield Asset Management, to come talk about how they're approaching these changes in the industry. I'll hand it over to Ben and then be back to take some Q&A from the audience.
Thanks everyone for having us. I say that collectively, but personally super excited to be here. And we're gonna try and cover a wide array of topics, but when you think about Miami, at least when I think about Miami, nothing rings more true than real estate. Like you walk around Miami, you talk to people, every third person here is in real estate. So it's super topical to be here to talk about it. And we've got two leaders of the industry that will have forgotten more about real estate in Miami than I will ever know. And so what we'd like to do, we'll talk about a bunch of topics. I know we'll have Q&A at the end, but if anybody's got a thought or a comment or a question, raise your hand, we'll figure it out and we'll make this interactive. So where I want to start, because we're here and we're talking about Miami, is starting with like why Miami and why now. If you think about real estate markets specifically in North America, it's probably one of the most dynamic markets over the past couple years. Adolfo, you've seen this market through cycles, and it always is the beneficiary of population growth and in migration over cycles. It's got capital flows and people flows, but this time it just feels different. The acceleration and the velocity of what we've seen really since the pandemic has really, I think, changed the pace of change in this market, and it's a constant, evolving place. So when you think about that as a backdrop, what you've seen in Miami and what you see today, and from a real estate perspective, how do you frame that up? What does it look like, and what kinds of opportunities is that bringing today?
Ben, thank you very much, and thanks for this opportunity to be here with all of you. Really appreciate it, and with some guys who are really distinguished in this business. What we've seen is that really starting from the pandemic, Miami all of a sudden just blossomed, and all of a sudden was identified as this is a lifestyle that people want to be in. And we had a huge influx, not just of new businesses, but the people that work there coming in with it. And that just presented tremendous opportunities for the real estate market. And today, what we have is that, there used to be probably a dozen, 15 real estate development companies really active down here 20 years ago. And I couldn't even begin to tell you how many there are. The competition, the amount of product that's being produced is enormous. And we're still seeing that it comes from all over. So to your point, when things get tough in one part of Latin America, another part of Latin America gets better, or people decide wherever it's tough, I need to get my money out of here. Yeah. Miami has been the beneficiary of that. Today, and I'll come straight to the point, what's really doing well is our real top-end luxury product. And that's being sold primarily to domestic buyers. That's a generalization, but things that are, in the top end, $3,000 and above per square foot, that's what's selling well. A little slower in the middle range, then the lower end continues to just, struggle along and move.
And for context, just for everyone here, to provide a data point on 3,000 a foot on the top end, what would that have looked like 10 years ago? Half of that?
1,000?
Yeah. So that's
Maybe.
a third. Yeah.
That's
So to that point, John, when you think about the sort of business that you run, which is creating places and constructing physical, real, hard assets and doing it in multiple markets, what does your business look like today in Miami? What did it look like 5 years ago? What will it look like 5 years from now?
Let me begin, Ben. I want to thank everybody. It's a real honor and privilege to be here today, and I just want to congratulate President Ayoun for hosting this type of symposium, because I think that bringing people together in this type of environment with a level of curiosity and distinction is really powerful. So I'm going to give him a round of applause. Sure, a story. We came down here in 1995, and you'll understand where I'm going with the story. For a gentleman by the name of Abe Gossman, he owned a company called Mediplex, Meditrust, and PhiMatrix, physician practice, assisted living, and nursing home facilities all over the country, one of the largest back then. And we were brought down here in 1995 to build nursing homes. And we started building quite a few nursing homes, and we started building assisted living. Then the assisted living market got in a little bit of trouble at the end of the day. Then we got involved in medical office buildings, MOBs they were called back then. And we were servicing sort of an aged population or aging population. And that was Miami, and that was South Florida back at that particular point in time. As time went on, all of a sudden, things have changed. I would use the word radically in the 30 years that we've been here. And you could see it morph itself over that period of time. One is obviously age generation became younger, okay? Became much more diverse. Before, a lot in Latinx, I think a lot of Cuban people at the end of the day, okay? Now it's not only international, okay? It's domestic as well too, a flight. And that, the reasons for that is, one, business friendly. Income tax. That's a big thing for people when you think about it at the end of the day from a businesses, especially subchapter S corporations, which I am at the end of the day. Then you think about really regulation down here. It's nothing compared to other parts of the country. We have 17 offices around the country, West Coast, East Coast, Utah, Nevada, everything, Texas, okay? This is one of the most friendliest business environments in the country. And they often ask, what more can we do to help you put a shovel in the ground and create an opportunity for the future generations? Then you take a look culturally. Probably one of the most powerful cultural environments in the country today in America. The investment over the last 10 to 15 years, the Perez Museum, okay, is really sort of showcases to what people can learn and expose themselves down in this particular environment. Then you think about it at the end of the day, sports, entertainment. One of the most powerful markets, Miami Heat. I can go on and on and on for those type of things. But lastly, and probably most importantly, is the intellectual curiosity that's been created over the last 10 to 15, 20 years. And the power of innovation. I read something here where they're saying, sort of Wall Street of the South, at the end of the day. You talk about the intellectual power here, and then you juxtapose that why Northeastern University made a decision to locate down here. They saw the opportunity, they see how business is changing, and they see not the jobs of the past or the present, where the jobs are going to the future. And very few schools understand that, and they're training kids for the young men and women for the future. So I think, in my opinion, being here for 30 years, the best of Miami and the best of South Florida is yet to come.
That's great. So just to add to that, I think, look, when we look at the world in terms of investing dollars in real estate, we have to think about things on a relative basis. So where can we shift that dollar for the right risk-adjusted return? 5 years ago, 10 years ago, for the last 20 years, if you ranked U.S. cities from an institutional investor standpoint, Miami would have just been on the second rung. It just would have, in terms of investability, scale, diversity of economy. I think it's flipped, and I would tell you now, most LPs of ours, large institutional investors, pension funds, sovereigns, this is a top 3 market that they want exposure to in some way, shape, or form. And I think it's a lot of what you're talking about and what you've seen in that evolution. And so I think what will become in the next 5 years, I think you're right, but I think it'll manifest itself in a lot of different ways and create a lot of opportunities. To that point, we've been positive on the topic. What are the challenges here? Because there's clearly, a tremendous amount of growth and momentum, but that brings different strains on public systems, on schools, on everything. And that's the one thing when you think about this market that I think people throw stones at. How do you think about that from a real estate development perspective?
Ben, there's definitely growing pains. Yeah. So from the fact that, here we have limited public transportation, the infrastructure has aged and we haven't kept up with changes that needed to be addressed. While you're right and we have business-friendly environment, try and get a permit pulled.
Yeah.
And it's, the guys from our company who actually do that on a daily basis would tell you a little different than what you suggested.
Try Boston. Try Boston.
Yeah, exactly. No. It's all relative.
It's all
right?
relative.
Yeah.
It's all relative.
Yeah, but I'm here.
Try California.
Exactly.
Labor is going to continue to be a problem.
Yeah.
And affordable housing, affordability of being able to live here when the salaries do not keep up with the cost of living. Those are some of the bigger challenges that I see here. The reality is, nobody's going to take away our sun and fun and what we are, but we always have the risk that we live from July until October worried about what's happening over the ocean and what's going to come and hit us. And having lived through several hurricanes, that with all of the construction that has taken place here, that could be a real situation that we have to address.
Yeah.
And without the right level of infrastructure, what can you do about it? And now we're talking about what do we do with garbage? I mean, something as difficult as that is going to be, and we haven't figured it out. So there are some issues, and then with the new policies that the government's taken in place, I mean, I'll tell you, the first time that there was an announcement that, people were going to get deported, we had a project going on in Jacksonville, and all of the roofing employees disappeared. Clearly they were working for, a subcontractor, and, we thought everybody is supposed to be perfectly documented, et cetera, but we know the realities. So that's going to be an issue. And tariffs, look, costs here, as you well indicated, of real estate increased dramatically. The cost of construction increased probably more dramatically.
Yeah.
And the price of the real estate has leveled and started to, kind of shift a little bit. The construction costs have stayed right up there. So those are issues that we all have to address.
It's a good segue because I wanted your opinion on this topic, but I'll let you go because you
I
know where I'm
remind all
going.
developers, construction costs never go down. we got to stipulate that.
Right.
It's interesting is that I think that pick up what Adolphe said is that first time in my career, construction costs are greater than the value you create by the build. Something that costs you $100,000 to build, when you finish building it, it's worth $80,000 for multiple reasons: capital stack, entitlements, sustainability design, and things like that. So to me, I'm going to share one quick story. If you think about this in context, you might have heard this before. The Empire State Building, back in the 30s, was built in 14 months. Today, to build that building would take 5 years. What has happened at the end of the day? A fragmented community, siloed community, and tremendous amount of inefficiency across the board. So what we have done as a company, and again, I'm a private company, so I can invest in the organization, okay? And we've created a clean data lake over the last 10 years. We have 29 data analysts in our company. And I often say to people, if you can't measure it, you can't manage it. And I believe in construction, people don't want to be measured, okay? If you introduce a set of measurements, all of a sudden your productivity starts to move in a positive direction at the end of the day. Then you couple that with the introduction of AI, okay? AI, I think, is going to be transformative to the construction industry. Let me share with you what we're doing about AI. I want you to think about what we call a seamless platform. And that is like a rectangle. And think about the inputs coming into it, which would be the developer. Think about the financing coming into it at the end of it. Think about pre-construction coming into it. Think about supply chain coming into it. Think about shop drawings, construction, self-perform, commissioning, and finishing the job up. If we were able to take all of that data and fuse it into a seamless platform and develop a sense of measurements across the board, all of a sudden, you would have substantial reductions in costs for the obvious reasons. 2 areas we're focused on as opposed to boiling the ocean. One is architecture. We believe AI will absolutely transform the world of architecture. Now, architects do not like to hear this, but 11% of construction costs are rework. If we could just cut 5% out of a $100 million job, that's $5 million. And what that would mean is using AI is getting the drawings, if you understand construction, geometrically and dimensionally correct. That's all you would have to do, okay? The other side of the schedule we're working on right now through AI is scheduling. We think because we built a building 30 years ago, 40 years ago, that's how we should build a building today. That's not the case. So there's an app out there working on, and I'll give you an example. Think about something like Waze in your car. You push a button and it gives you an alternative route to go. In construction, there's developing an app right now where if you push a button, your critical path can change on the job. Because what happens is if your elevator is late or your steel is late, how do you mitigate those challenges and bring the job to a close so it eliminates, so that delays potentially could be there? Those are just 2 examples of people trying to get involved in the business. The last thing I would share with you is we started probably 5 years ago a construction tech fund called Suffolk Technology. It's the #1 venture capital firm in the country right now. You look it up. We've made 55 investments on seed Series A's investments. Startups. We run 125 jobs in the country. Somebody comes out from Stanford, Northeastern. We take the young men and women, put them on a job site as a test bed, see if those fail. Unlike pharmaceutical, those solutions will fail very, very quickly. It doesn't take 5 or 6 years, which is good for our industry overall. But I would say this, from a real estate point of view, I think you're going to see the most transformation in the next 5 years we've seen in the last 25 years. And I think it's about time because the pressures on cost are overwhelming.
You know, Ben, you asked us, well, what were we using it in? And I went to everybody within our organization just to find out. And in addition to using it for some of their personal stuff and, you know, creating RFPs and, you know, doing that type of thing, our marketing group is using it very, very actively. And then our contractors and our partners, from architects to engineers, everybody is actively using it. Everybody says today's still in its infancy, and there's still a lot of kinks that need to be worked out, and there's a lot of concerns about the integrity of people's information and the privacy of that information and not sharing it with others, etc. But the reality is that I totally agree with you. This will completely change the way that we do things. And as a matter of fact, going back to plan reviews at the county and the city and so on, they're starting to integrate AI in their reviews so that they can actually streamline the process.
Well, nothing could be more antiquated than most public review processes, so any technology enablement would be huge. But one thing that I think, and I'll just add to that, that I think is interesting from a real estate perspective as you harness AI and big data and you start to actually have data sets that you can make informed decisions on is, You hit on the obvious one, which is cost reduction, time reduction, efficiency. When I think about our real estate business, and we own pretty much exposure to every sector you can think of. So you stay in a hotel, we own hotels. You rent an apartment, we own apartments. You get an Amazon delivery, we may own the warehouse that delivery comes from. So really, we're actually just in like the customer service business, and we just own a lot of built real estate that things flow through, whether they're people or their goods or their services. And what I think we're trying to figure out is we don't really actually know our customers. We have things that people want to use, whether they want to rent our apartment and live there, or they want to stay in our hotel for a night, or they want to work in our office building. But I tend to think our industry is really just kind of reactive in terms of a customer shows up, you want to rent space, here's the rent, here's what you'd pay, move on, transactional. If we start to utilize data to actually understand our customers better, one, we can make more informed decisions. What should we invest in? What should we sell? Where's momentum going? What's the macro story telling us, and then the micro decision making? But if you think about in both of your businesses, development and construction, how that starts to inform what we design. So, you know, are we thinking about, we are naturally invested in the built world. So we build and create, you guys create places that are long life, long duration, fixed hard assets. But as you said, technology is changing the environment we're in quicker than ever. And so we built these things that are going to be somewhere for a long time. How are we starting to think about what we're building into the design of our complexes, the design of our assets, the technology enablement for the future, and how do we future-proof things?
You're already putting it into some of our buildings. I mean, we're already creating smart buildings, and simplistically, you know, you don't need keys anymore. You don't, you know, you can order things easily. Everything is being built right into the actual building itself. And we've started that process already.
Yeah.
I would say two things. One, and I'm going to go back to the beginning of the conversation about data. We have what is called NFC in our company, and I'm very, very serious about it, no-fault culture. It's a fireable offense. If I ever see anybody castigating somebody for making a mistake, they're gone. I don't care what position. The reason why, you know, if you got a good, strong culture like Northeastern does, if somebody makes a mistake, what do you feel like? It's terrible. Well, you don't want somebody piling on. And if you have a no-fault culture, all of a sudden data becomes your friend, not your enemy. Because all of a sudden when people are not used to using data, they're afraid somebody's going to use the data to put them in a box. That's typically what happens. And so if you create that no-fault culture and you start using data on an incremental basis, people realize all of a sudden, well, this can benefit me. The second thing is, I think from a technological point of view, we see this across the board. You buy a car today. How many people my age, you could jump in a car, right? And you don't know what the hell to do. You put your keys on, you can't use any of it at the end of the day, okay? So the idea in our industry right now is reverse mentoring. How do you take the young individuals that were born with that DNA chip of technology in their arm, and you partner them with somebody my age? All of a sudden you get technological capabilities on one side and experience on the other side. There is no better way to create an outcome from a collaborative point of view to bring those two parties together. And also at the end of the day, what you're doing, low cost, high cost, much greater efficiency. And it's a win-win situation. I think the data issue today and the technology journey today, we need to sort of take a step back and understand people don't want to be vulnerable at the end of the day. And until you create a sense of trust with people, okay, the data journey is going to come to a halt. And last comment I'll say is that, and you can't build trust with somebody without being vulnerable. I usually start out my conversation with people, listen, I'm a severe dyslexic. I didn't learn to read until 9th grade. I can't spell past 3rd grade. You could never read my handwriting. Never, not in a million years. And I could never get into Northeastern. So that's my pitch. Okay, that's my pitch. Went to Bowdoin College, didn't require SAT scores. But that's my pitch from a vulnerability point of view. And all of a sudden people, oh, okay, he's willing to be vulnerable with me. And I can relate to him. I'm going to share some things that I don't know. And I think once we embrace that level of vulnerability, build a sense of trust, okay, we're all of us going to start to make some gains in the technological world by the people that are afraid to ask the stupid question.
That's a great point. Okay, couple quick hitters, and then I think we'll probably move on to Q&A, so we have plenty of time. It was mentioned a couple times, we talked about Northeastern, Miami, and this being the gateway to Latin America. From a real estate perspective, how important and what is the relationship between Latin America and the South Florida economy today? And I know that, again, has changed over time, but I'm curious on, historically, I've always thought about, again, we talked about capital flows, and there's a very strong element of capital preservation here for many Latin American, whether it's individuals or companies, et cetera. But now that it's a more diverse economy, but the cultural tie is still very strong, what does that look like today?
That concept of the gateway to the Americas, Miami being the gateway to the Americas, has been around since I came here 45 years ago.
Yeah.
And it is as true today as it was back then. The fact that people come here and you go anywhere and they speak your language. Somebody speaks your language. The fact that culturally you're fully integrated. The fact that many times it's easier to fly into Miami and out of Miami to another place in Latin America than it is to try and get there from your own country. Businesses, the exports out of here, mostly into Latin America, imports coming from Latin America, it's across the board fully integrated. And for the real estate industry in particular, as I look at the numbers, if you go back about 15 years, you would find that 80% of what we were selling was being sold to Latin Americans exclusively. Mm-hmm. And not the same country, because it fluctuated, Sometimes it was Venezuela, sometimes it's Argentina, sometimes it's Colombia, sometimes it's Chile. This year it's Mexico. It's all over the place, depends on what's going on. Today, there's more uncertainty in what's happening here in the United States, our policies, etc. That has slowed it down, except for Mexico. Mexico continues to be great. But from a business perspective, if you want to do something in Latin America, you don't even need to go there. You can just find somebody here who'll help you with it.
Is that a plug for your business? Okay, so touch on one of the last things you said about Mexico, tariffs, topical. 10 minutes before walking into here, I saw another Bloomberg news alert on the updated tariff potential on Canada and Mexico. In the construction world, everything comes down to cost of labor, cost of goods.
I think, again, with the tariffs point of view, is I think you need to take a step backwards as well, too, is that you got to look at the data, okay? Right now, there's a cloud or a hangover from 2018 when we put the tariffs in place. Steel went up 30% back then. And it was overreaching. And what happens in our category is that people really don't like uncertainty. And so the anticipation of tariffs being placed on things creates a real nervousness and movement towards conservatism. But if you unpack it at the end of the day and you use a little bit of data, you think about a construction site, a building that you build. I'm just going to argue that 60% is labor, 40% is material. You go 50-50 if you want. So let's go 50-50. Out of the 50% of the material, you're talking about a job site, $100 million job. Say probably 20% of that material is coming from overseas somewhere, okay? Where you are buying, whether it be aluminum or something else like that. Could be 25%. Now you're talking, multiply by the tariff at the end of the day. Take out fabrication. Fabrication is typically done domestically. So we just did a white paper on tariffs, and what we concluded is, with a lot of research, right now we're advising clients nationally right now, anywhere from 3 to 5%, if you want to carry yourself at the end of the day. I think it's more towards the 3, okay? Some people think it's up near the 5, okay? And it could go 6, it could go 2, but my sense, if you hover in the 3 to 5% category, I think that's a very I won't say conservative, thoughtful, data-driven sort of response to tariffs. Now, I think as we all know, tariffs are inflationary. And if you take a look at the administration we have today, there's no doubt in my mind the tariff war that's going on is a huge club. And I think at the end of the day, what's going to happen is it will settle itself down because the fragility of our economy today, with interest rates where they are, the 10-year Treasury trading at 450, it can't continue. We can't cause more pain and suffering right now to the overall economy. And I think our administration, or the administration today, understands that.
Now, you heard it here. You heard it here. The tariff war is.